Transaction Capital results just to hand for the year to end September. It's the 10th year, and David Hurwitz, Chief Executive, is with us. David, I was expecting the market to react a little differently to these numbers, but is this a case of buy on rumor, sell on fact? I mean, the numbers look very solid, and yet the share price down 5% in the wake.
Yeah, hi Alex. Thanks for having me on the show. I think the numbers are good. If you're looking at the share price, I always say to you that my job is to run a good business and hopefully to deliver consistent earnings, and that's what we've done now for 10 years at Transaction Capital. If you look at our share price, we've been trading between 38 and 42 over the last probably a few months. So we've kind of come, from the top of that range back, into the middle or bottom end of that range. And, I try not to spend too much time worrying about the share price. We're well rated by the markets. We've got a good PE. We've got great access to capital if we need it. And, if the share price is up or down by a few percentage points this way or that way, it doesn't bother me. All in all, though, I'm happy with the earnings. Nutun's got a great growth prospect. Our headline earnings in WeBuyCars looks fantastic. Taxi is the one business, still facing some headwinds, but we have great strategic plans for that, which we've set out in our presentation.
WeBuyCars has just shot the lights out. You must now be looking back on that acquisition, and you're building up your equity to, I see, 89% that you're working on at the moment. It really has been a game changer for Transaction Capital, looking at the numbers now. And let's pull them out. In the last 3 years, your WeBuyCars contribution from 9% to 43%, 7% to 27% to 43% this year. So now your biggest profit contributor, and their revenue is up 66% in the past year. I'm sure you must have had a lot of questions on this in your presentation to analysts a little earlier, but I suppose WeBuyCars, when you look at it in a global context, it's really quite a jewel.
Yeah, we're really, really happy with this business. When we bought the business, it was only trading about 5,000 vehicles a month, and I think that management team, but also together with our input, has been able to take that up to 12,000 vehicles per month. So there's been great growth from that business. We've done better, just not only just in expanding our geographical footprint and growing our market share, but we've done really well in online lead generation and e-commerce trading of vehicles. So that too has worked fantastically. And of course, we're also earning more money by selling finance and insurance products together with the sale of the vehicle itself. So all in all, we're really happy. I think we've probably been surprised on the upside. I mean, it was a very deliberate strategy to invest into this business. But I think what has happened as well is that there's probably been a little bit of surprise on the upside as well.
Why Morocco as the next geography that WeBuyCars will look at?
So I think Morocco will be a small geography. What we wanted was to step out, to test our ability to step outside of the borders. We looked at Africa very carefully. We like Morocco in terms of, first of all, the size of the market. It's roughly about 50 to 60% the size of the South African market. In Morocco, just like South Africa, you can't import vehicles. So that allows us to build artificial intelligence and algorithms to be able to price. You can't have these big fluctuations coming through, in terms of, cheap imports coming in from other geographies, from Europe or Japan, etc. So that works really well. And we've started off organically. The business is already profitable, but very small. We're looking to buy, a car a day for the next few months. And what we do think we can do is we can get to a similar penetration in Morocco as to what we have in South Africa, which would mean we'd have a business maybe 40 to 50% the size of our South African business in Morocco. But we think we can do it, as opposed to 20 years in South Africa, probably in 5 years in Morocco. So it's an exciting opportunity, but it's not going to be, earnings accretive for the next 2 to 3 years.
That's an interesting approach because it isn't a country that one hears much about in South Africa. I would have thought, given that you're moving into Australia with your Nutun business, your debt collection business, that might be the next move. And interesting in your presentation as well, you showed that WeBuyCars is probably 3 times bigger than its biggest equivalent in Australia. So is that not a market opportunity for you?
Yeah, I think what we really wanted to do is be on the African continent. In Morocco, the other thing we liked about the Moroccan market is that there's no incumbent over there. It's a very fragmented second-hand market. And in Australia, there are participants. So Morocco is kind of, open blue ocean for us to swim in, whereas Australia, we'd have to come up against competitors. And Australia is a tough environment to operate in. So South Africans often think that they can just go there and succeed. We've done well in Australia, but by no means have we shot the lights out over there in our Nutun side of our business. So we just thought that Morocco was certainly an easier step to take.
Yeah, Australia is a difficult market. South Africans, as you say, it's been a graveyard for almost everyone, excepting for the guys from Metcash who went there years ago and have done terribly, terribly well. Just before we move off WeBuyCars, how much expansion potential still exists for the company? We see now that its market share must be growing. Well, I think you're looking at 15,000 cars a month as your next target. But where would where would you start hitting some or losing some headroom?
Well, the interesting thing is that we sell about, at the moment, well, on aggregate last year, we sold about 10,000 cars a month. At the moment, we're at about 12,000 a month. And our current market share at the moment is probably below 10% across the country. But if you look in certain geographies, so for example, we opened up in Mbombela, which is the old Nelspruit or the new Nelspruit. And our market share was naught in Nelspruit. We bought a lot of cars in Nelspruit, but then used to truck them down to Joburg and sell them in Joburg. And all of a sudden, we've opened a branch there. We don't think of it as a large branch. It's got about 400 bays or 400 cars under roof. But it's by far the largest second-hand dealership in Nelspruit. And all of a sudden, we've got a big market share in Nelspruit. So I think as we expand geographically, we'll be able to take more market share, but then also within our existing markets, we should be able to take market share as well. We've got first mover advantage. We've got a fantastic brand. We are a trusted brand in the sector. We're online, which allows us to, attract customers easier and quicker and engage with them digitally, which is what people want. And I think we can take our market share. If we hit 15,000 per month, our market share will move into kind of the mid-teens. But we've got aspirations over the medium term to get to 20% of the used car market, which would be about 240,000 cars traded per year. So almost double the size of what we are now.
And it's an extraordinary story, isn't it? When you have a look at Faan and Dirk and their early billboards with cash in their hands, we really want to buy your car. And the story that now is, as you corporatize it and you inject capital into it and continue to expand, it must be maybe one day a listing on its own, or would it always remain within the stable?
I think potentially. I mean, we've built a very nice mobility platform. So, maybe that platform could be listed together. So what we have is WeBuyCars being the tech-enabled trader, producing high cash conversion rates. Earnings and cash are pretty much the same thing. And then on the other side, we have SA Taxi, which we would have to rebrand. SA Taxi being a financier into the minibus taxi industry, but in truth, we should be able to use that competency to be able to provide finance and insurance into second-hand cars as well, where banks are underserving that market. And why don't banks participate in that market? Not because the credit quality isn't good. The credit quality of the buyers of second-hand cars is very good, but they just don't know how to apportion or allocate value to the collateral. So they almost treat a loan against a second-hand car as an unsecured loan. And what we are able to do is we know what the value of a 5-year-old car is because we buy and sell them all day long. And if we have to repossess a 6 or 7 or 8-year-old car, we can sell it very quickly on our platform for best value. So this allows us to start selling finance and insurance product into the second-hand space with all of the skill sets that we have in WeBuyCars, the data and the ability to trade, and all of the competencies that we have in taxi, being, to credit underwrite, to insurance underwrite, to collect, to repossess, etc. And I think we could build a nice mobility platform. Yeah, maybe that could be listed separately in time.
That growth rate at WeBuyCars of 66% in revenue in the past year, how much of that was organic and how much was because of the expansion, the deliberate expansion of new outlets?
Yeah, so I haven't calculated it like that. I viewed the opening of new stores as organic as well. I'd have to get back to you on that. But if you take a look at bays, our bays pretty much went from, if you just give me a moment here, our bays went from 5,800 bays at the beginning of last year to 8,500 bays. So about a 48% increase in bays and about a 40%, you quoted the increase in revenue. So you can see we're doing better per bay, but have also increased the bays. So, I'm pretty happy with that stats as well. I hadn't thought of it the way you had thought about it, but now that I do the maths in my head as I sit here, it sounds good.
And increasing your stake to 89%, how do you keep Faan and Dirk excited about going to work in the morning?
So, first of all, we've always viewed ourselves as a entrepreneurial, founder-led business. The 3 founders of Transaction Capital are still involved in our business. They own just under 20%. So we know how to deal with founders. We know how to deal with entrepreneurs. And I think that was, besides for the business fit of us being able to introduce finance and insurance and tech into their business, I think there was a good marriage of culture, this kind of founder-led entrepreneurial culture. So I think we can tick that block. The next thing is that I could understand Faan and Dirk's requirements when we first did the deal. They went from being majority shareholders to being minority shareholders of the new majority. So what they wanted is they wanted a contractual exit out of the business over a 5-year period. What's happened now is we've seen that we are actually great partners, both ways. We are very comfortable with them. They're very comfortable with us. They see great growth prospect partnering with us, as do we with them. And what Faan and Dirk have really said is the put and call structures that we had in place would have closed out to 2028. And really what we've done is we've said we want to accelerate our shareholding now. The quid pro quo from their perspective would be that we'll take our call options away and leave them with 10% and a put of that last 10%, but it's really now within their hands. So if they want to hang around forever, they can, and we'd be delighted because we love having founders in our business. They still own 10% of a business which is valued, well north of 10 billion rand. So, there's still a big pile of value that I think, makes them want to, get up and go to work. But guys like Faan and Dirk, aren't coming to work because they want to increase their value. They're coming to work because they've built a business and they're passionate about the business, and this is what they know and this is what they love doing. So, I think we're very well positioned at the moment with them.
SA Taxi, not so exciting a story right now. It was the big part of the business 2 years ago. It's now becoming, well, maybe somewhere where it might be a bit challenging for the Transaction Capital guys. Can you tell us what you're looking at there and how you might be addressing it?
Yeah, so if I take a look at SA Taxi, as you correctly say, less exciting at the moment. I think the exciting part is that we're able to kind of leverage what we've got in SA Taxi into the used car space, which is another add-on benefit of the WeBuyCars transaction. But the core minibus taxi sector is under strain. We've had COVID, which impacted commuter movement. We've then had high fuel prices. which impacts operator profitability. We have had Toyota increasing prices of their car during this period, and the industry not being able to pass a fare increase, which hopefully would have absorbed some of this financial pressure. The fare increase only went through in June this year. So it's really been in a tough place, the minibus taxi industry. And then, of course, now we've had the flooding of the Toyota facility, which restricted our ability to, the product that we finance in the main is a new Toyota minibus, of which none have been produced for 6 months. So really a very difficult environment. We haven't just sat on our hands, we've had to adjust. We've done things like reduce our cost structure. We've been more selective on the credit that we've been advancing. We have extended the term of our loans, which makes installments more affordable. When there were no new Toyota minibus taxis, we kind of tilted and started financing more of our pre-owned product, which is a vehicle that we've repossessed and rebuilt, which is cheaper and more affordable. So it helps us combat affordability, but also helped us combat supply disruption from Toyota. So I think we've reacted well, but it's still in a tough space. And we don't see the taxi business growing for the next year. But our other two businesses grow well. And in 2024, we would see the taxi business starting to grow and also Gomo starting to positively contribute as well. So that's, a segment would do better from then on.
Let's talk to close off with about Nutun, the other growth business, which debt collection, what do you call it in your company when you have these businesses that people outside look at the sector and they say, it isn't the sector I want to touch, like debt collection?
High stigma. We've spoken about this before. High stigma businesses.
Okay.
We're in the minibus taxis, used cars, and debt collectors.
Okay, so high stigma, but you have brought ethics and values into those industries. I certainly know the WeBuyCars guys well enough to know that that's a very ethical company. On Nutun, though, is there a international opportunity there? I see you're getting quite a lot of turnover coming from Australia now. What is the outlook on that side, given that South Africa is a business process outsourcing hub in a global sense?
So that's exactly where we're going. What we've seen is that we've got fantastic technology and we've got a great ability to attract and train people and to then bring these people, into our environment and start operating. What we've done in Nutun is this year, 10% of our profits will be from global clients outside of Australia. So actually mainly in the UK. And the services that we are providing are not collection services. So these services would be what we call customer experience management. So if you kind of think of the life cycle of a customer, there's lead generation, there's sales, there's onboarding, there's customer care, customer dispute, and then early stage collections, and then finally through to late stage collections. We have made all of our money on late stage collections, and we believe we can participate in all of those other services, not only in South Africa, but in many other geographies. We've done well in Australia. We've done very well in the UK of recent. As I said, 10% of our profit comes out of the UK, and we've got an eye on the US. So a real opportunity to, I think, broaden our geographies, broaden our services, broaden our sectors, and operationalize everything from South Africa. So earn pounds and hopefully dollars as well, maybe euros, but all of a rand cost base, and also create jobs in South Africa, which we are proud about. We created about 800 new jobs in this division this year, and about 600, just below 700 of those were into the youth. So we have created youth employment.
Good news. David, what did you tell your shareholders or the analysts today when they asked you about projections for the next financial year? You got 10 behind you. The annual compound growth rate has been north of 20% in the last 10 years. Are you able to say, yeah, we're going to do the same in the next 10 years? Or what kind of forecasts are you allowed to share?
10 years is a long time to forecast out. I like to focus on 10 to 12 months, maybe 2 to 3 years. But looking at the opportunities, as I said, taxi is a business that will solidify over the next year, but the other two will continue to grow at above 20%. And that should allow TC to grow certainly next year, again in the high teens. And I would like to say over the medium term, next 2 to 3 years as well, at a similar rate, and maybe even slightly accelerated if we see a recovery in the taxi sector, which I would expect, number one. And number two, as GOMO starts contributing to our profitability. So we're pretty excited about our growth rates being in line with what we've done for the last 10 years going forward.
Exponential.
Exponential, yes.
That's what it is. Thanks for multitasking. I see you've been playing with your phone and getting phone calls in, but it is results day. So one should...
Alex.
But thanks again, David. Good talking with you, and look forward to catching up next time.
You too, Alec. Thanks so much. Okay. Great chatting. Okay.